All right, what's up, you guys? Hope everyone is doing well. Today, going to be going over the three trades that I took. Excuse me. Ending the day up about, like 5R, but really like 600 bucks or around. So, took three trades. Today, I thought was a pretty challenging day, in all honesty, for my model, but we came out on top. Going to be going over the price action, trades I took, and why. I would still consider this a good habit day despite taking three trades, and I'll talk about that when we get into the price action, the way it unfolded. So, going into the day, we had this gap up. First, fundamentally, on the daily time frame, we respected this high time frame breaker block, and we're bullish to the relative equal highs. Maybe we get a Sant to rally, maybe not, I'm not sure. But fundamentally, I'm still bullish here long term, I guess, until we would have to invalidate this breaker, I guess, in order for me to be bearish, to see the lower prices. But generally, a gap up is going to be bullish. So going in, I was leaning bullish. But with that said, we didn't really have that many good bullish targets. We had this intermediate high over here on ES. It looks like a pretty good target, but we did already take it on NQ. So technically, there is an SMT being put in at this high. But I do think the draw is still higher. Marked out, we had a 4-hour unfilled fair value gap, as well as a really small unfilled 4-hour fair value gap on NQ. Additionally, we had really good sell side targets. We had unfilled hourly at the time. London lows, we also had Asia lows. I took them off, though, because we took that in correlation with the new week opening gap that we put in. New week opening gap, London lows, very high conviction draw on liquidity. Additionally, I wanted to see if London lows would end up being protected, because if I was going to be bullish, right, I'd want to see London lows be protected, because we traded into what just happened? Because we traded into a high time frame key PD array, this 1-hour fair value gap. So I want this to be lowest price goes, come up, take the 4-hour, and then rotate lower for the sell model, I guess, to a new week opening gap, or manipulate lower, generate some form of generated buy side liquidity, and then take longs, targeting that aligned with the high time frame bias. So yeah, that's essentially what I was looking for at open. At open, I had to go to the bathroom, so I had to step away. But we did print this really good Judas move to the relative equal lows and just the generated low resistance liquidity. So, this is all low resistance liquidity here. These are just great targets if you're going to be bearish. What happens at open? We come up, we take out this internal low inside of a 15-minute gap. Or we tap the 15-minute gap, and then we come up, manipulate the 930 high. There's a 30-second. This was a pretty good setup. I literally sat down right as this candle opened, so I didn't even have time to process it. But you take this, which is the highest time for inversion, in the leg, go break even at the 930 low, as well as London. You have, just so many good targets. You have unfilled 1-hour, so many just like swing lows here. You got the London lows, new week opening gap, just great draws on liquidity. I would probably cut it London lows, because we did end up putting in SMT at London lows. After this, after we sold off, we opened up this 5-minute. So I was looking to see if we could get some sort of a continuation, as well as maybe we're going to open up a 15-minute. We did come back to this 15-minute BPR here, which is an inverse fair value gap that gets traded through, and that we can come back up and use as essentially a bearish fair value gap. So we came up inside that, and then I was essentially looking to see my continuation model. Now, this is technically a valid continuation model. Retrace to the 5-minute or 15-minute. You take our highest time frame fair value gap, and you hold to new week opening gap. You get a 1-to-1. I didn't like this, though, because we had these equal highs here, which prompted me to my first trade, which was a 15-second setup that I entered here, because at the time we had an unfilled 5-minute, or sorry, unfilled 3 minute that we opened up. And I really wanted to see these equal highs here get hit because I was bullish. This also was inside a 3 minute fair value gap. So I took this, I limit ordered the fair value gap here because I was expecting it to get traded back to, and then I got stopped out at the candlestick. I put the stop at the candlestick body low because, in all honesty, in this situation, this is a 15-second trade. This is like very high conviction. We didn't have to come up and take this right now because we could honestly just keep going lower. At the same time, I think my bias to be bullish was reasonable, but it's a little bit tricky because like this is an hourly fair value gap. At this point, we're still in here inside this hourly fair value gap. Or wait, sorry, no. Well, yeah, we're still inside this hourly fair value gap. If I'm gonna be bullish, which I am after seeing this 1 hour fair value gap get respected, then I want to see an open low high close on the next hourly candle. And yeah, the draw was just lower though. I'm not sure that this high time frame or high resistance high will end up holding. But yeah, I want to see these equal highs get hit. I do think this was not that amazing of a setup. This is my execution, by the way. The first trade. Yeah, so entered this candle when we tapped the fair value gap, and then got stopped out later the next candle. I do think this is a fine trade. I mean, I'm honestly, like, I'm not upset with taking this loss because, one, super low risk. I mean, this was like, I don't even know how many ticks it was. I think this was like maybe like $120 loss or something like that. You know, entry was here. 35 times 5. Yeah, it was about like about $120 loss. So great trade, great risk management. If I would have been able to hold this would have been like, I mean, just insane risk to reward. If this ended up playing out, probably like a what? One to 2.7. Oh wait, no, because the entry was here. About a 1 to 4 risk to reward. So super happy with how this played out. I mean, this obviously got invalidated. Got stopped out. Then after this, we sold off to the internal low on ES. And ES has like, I mean, 1, 2, 3, 4, 5, 6 equal highs here. Equal highs when they're in separate swings or separate areas of price are a lot more higher probability than just like, you know, a bunch of consecutive levels right next to each other, like consecutive candles. And I mean, ES is the equal high, equal low machine. So constantly printing equal highs and lows. But still, very high probability drawing liquidity. So after that, I'm still bullish to these equal highs. Yes, we do have downside targets, but we're opening up a 5-minute as well. So this is my mechanical model. We also do have an SMT at London lows here. So at this point, I'm still bullish. But like the argument can also be made to be bearish. Like we came up, you look at the 5-minute, respect this 5-minute fair value gap, you got that 15-minute PPR, 5-minute inverse fair value gap, new week opening gap, low resistance liquidity. I mean, the argument can be made either direction. I do think I was trying to force some of these trades here, but the next setup, I mean, we printed this SMT here at the intermediate low, and I want to see us retrace the 5-minute to, you know, potentially get the continuation model back down lower. And I took, there was a 30-second, where was this? Or wait, what was the setup that I took here? Was this a 15-second? Wait, sorry, I can't really remember what this. You know, it's not that good of a trade when you can't remember what it was. Oh, it was a 30-second here. So 10-16. Yeah, so entry was. It doesn't even look like we got the real close here on. We did. Where's my entry here? 25684.25. It's right here. Target the 5 minute. Stop loss at the body. I mean, another super high risk reward trade. So we put in the SMT at this internal low here. 30-second inverse fair value gap is your highest time frame in the leg to go and target the 5 minute fair value gap for the retrace. Because in this leg that ended up taking out the internal low as well as putting in the SMT, it was a 30-second right here. I mean, this is like, price is fractal, obviously. So, like, you see this on a higher time frame, and it would be even more of a light bulb moment. But I went in here, one contract, stopped below the down close candle, break even at the internal high inside of a fair value gap because, I mean, this is an area where I could expect price to reverse from. So, stop loss to break in here, get stopped at break even, and then this ran. I don't think it ran to the 5 minute fair value gap because price was just like chopping at this point. I think we also tapped the 3 minute. I'm not really sure. Again, not a phenomenal trade. Definitely two forced trades, but the way that the risk management worked out, that these are like fine setups. And if one of these first two setups would end up playing out, I got the bias correct. I mean, that would have been phenomenal. I mean, great risk to reward plays. Not really upset with those two setups. I do think the second one was better than the first, but I mean, just unfortunate it didn't play out. And then the last setup that I took, definitely the best setup. On the 1 minute time frame, you're like, what is this guy longing off of? I don't see any inverse fair value gaps. This guy's crazy. What is he even doing? How is this a good habit day? So we come down, we take out the new week opening gap. At this point, we have an SMT with ES. When ES takes this internal low, we also had equal lows here on ES. So we have a SMT with the new week opening gap with ES. We have pretty good buy side targets when we open up this unfilled 5 minute fair value gap here. And then zooming in, we chop around for a few candles. There was a 30-second inverse fair value gap here that I was looking to take. But after seeing this, delay for like how long did this take? 1, 2, 3, 4, 4 candles. I was like, all right, the draw is still going to be higher to this unfilled 5 minute because after we put in the SMT at the new week opening gap, the draw is going to be higher unless we want to just fly through lower to the new week opening gap low. But we just dumped, I mean, pretty much since open for about 150 points. So I was looking to get the retrace. This is my mechanical model. I've seen this play out many times. You get your 30-second inverse fair value gap. So this could be one entry, but I took the 15-second turtle soup. So after we opened up this fair value gap, this is ideally the lowest I would want to see price go if I'm going to be bullish. Yet again, very good risk to reward. I entered off of, after we got the confirmation candle here. So you have your low, high. Technically for it to be a turtle soup, you need the second candle to confirm the move. So I entered, candlestick open there, and held to unfilled 5 minute. But then I zoomed out and realized that we still had all these relative equal highs here and equal highs on ES that I want to see get hit. So I was looking to essentially take this off when ES got the close. So I went break even here at the 5 minute, and then I trailed my stop after we tapped the 1 minute fair value gap. I would love to see this be a breakaway gap, not get traded into, but seeing this get traded into was fine. Moved my stop loss then to the candlestick body low here, because after the way that, I mean, this is another model in itself. Very V-shaped recovery. If you're bullish, you want to see higher prices here. Go like stop below here. The body, you term high. I mean, you can't even get a 1-to-1 on this, but this is a whole model in itself. So after we did that, I took it off here at this high after the resweep. And my logic for this was because I still think we could have gone higher. Take out the equal highs that we had above, as well as just, higher draws on liquidity. After we reswept this for the first time, though, we have all this generated sell-side liquidity here. So after we sweep external liquidity, which would technically be this, I want to see internal liquidity get swept. And after this, I mean, we could have flushed after this 30 seconds. So I was like, you know what? I'm just going to take my piece of the pie here. Not my traditional setup. Do think I got a little bit lucky here, but again, super technical entry. Like, I see these internal soups play out all the time in correlation with the 30-second inverse fair value gap to the unfilled 5-minute with the high time frame SMT bouncing off a new week opening gap. Bullish overall high time frame. Really good trade. Pretty happy with how I played it. Now that said, if we simply just came up and took like this 4-hour unfilled or this other 4-hour unfilled and took the internal high on ES, I would have been bearish a lot quicker and maybe been able to catch like a short that we got up here. But yeah, overall, just like a pretty tricky day. And I do think the argument could be made for it being a no trade day as well. But there are just a lot of low time frame opportunities that, present themselves. And I mean, I've been putting in the reps. Technicals are super sound. Like, I feel confident taking these lower time frame trades, especially when the risk to reward is favorable. Right now I'm in the process of trying to scale these funded accounts. So starting off with like a 1% or 0.5% loss off of like an setup, when I can, take something that's a little bit more technical, maybe something a little bit more lower time frame that still has that high conviction edge since price is fractal, maybe fine taking those setups. With that being said, also, it is Christmas this week, so don't expect price action to be phenomenal. Most of the big bankers are on holiday. That's just the way it works around the holiday season. But there's still going to be opportunity in the markets if you have your model, if you've been watching price, if you know what you're doing. In regards to the 3 trades, I do have the rule that's one and done. But the idea behind that rule is it's one and done when I'm taking like a normal higher time frame. Well, I guess not even really higher time frame, on like the 1 minute, 2 minute, 3 minute, 4 minute, 5 minute inversion highest time frame. Then my stop loss is going to be around 100 ticks, closer to that 500 to 600 risk mark that I would, go in with on like a normal price action day where price is moving super clean. Again, those V-shaped recoveries, the market maker buy model, sell models. That's when I'll go in and just be one and done, regardless. But on the first setup, I mean, I'm risking $100, like even less than that, about $120. That's like about a fourth, or in between a fourth and a fifth of my risk on the day. So like, I can take that loss and be okay, and maybe go in again for something if I feel confident, if the opportunity presents itself. But the main thing is just like being patient for that setup to occur. I mean, the loss and the break-even trade that I took, I felt confident in seeing play out. So I'm going to execute. That's following my strategy, following my rules, following my confluences, being a good trader. But the second that I start taking big losses, like let's say I take a $500 loss, $600 loss, that's like my max loss limit on the day. That's when I'm one and done, regardless. When I start over trading, when I'm risking that much, that's when that becomes a problem. But as long as that max risk is below that number, and I'm taking that setup when it happens, then that's fine with me. So I'm perfectly fine with how I played it. Like, being true with myself when I actually do have a bad habit day is something that is super important to me. And I mean, I've gone tilt so many times at this point that it's just like, I just don't even want to experience that again. And I can truthfully sit here and say that, like, that's not this feeling. Like, I'm very genuinely happy with how I played today. and the setups that I took, despite them being lower time frame, a little bit unorthodox to, my bread and butter, excuse me, my bread and butter, like discretionary continuation or mechanical model setups, which were all in correlation to the setups I took today, just on higher time frame. So yeah, I mean, if that doesn't really convince you that like this wasn't a good habit day, then I don't really know what to tell you. I'm the one that's training here at the end of the day. I feel pretty good with how today went. So yeah, pretty difficult day in all honesty. Really, I was drawing liquidity lower, which was the new week opening gap. But yeah, that's gonna be all for today. So hopefully you guys have learned something. It's kind of a little bit just like me rambling about the trades I took and the price action that unfolded, because I was honestly like really confused which way we were going most of the day. But we made it out. Get to fight another day. I will be trading tomorrow. I'll see about Wednesday. Thursday's Christmas, so not going to be trading. Friday also probably will not be trading because I will be traveling. So hopefully you guys do the same. Take some time away from the charts later this week. And yeah, I'll be back again tomorrow. So I'll see you guys soon. Peace.